Edutrainment Workshops, the insurance industry's leading education and training platform, presents Life Insurance, the entry-level series, the products, the underwriting, and the planning applications to position your practice as the premier provider of insurance products in your community. Get on board, get on track, get to where you're going. And now, your Edutrainer, national insurance columnist, Steve Savant.
Well, welcome everyone. I'm Steve Savant, your Edutrainer and coach for our Edutrainment workshops and our entry-level introduction into life insurance. And this week, we're doing our introduction into survivorship life, or second to die, where you put two clients on one contract. Amazing. Well, let's talk about it today. Before we go too much farther, remember, you're going to need to have the software for today and tomorrow. So go out to the site, LBL's site, Lincoln Benefit Life, where they have their Eclipse illustration software. It is the best software that we use for tutorial and for training for life insurance. It's really user-friendly, and we highly recommend it. Go out to their site, www.lblsales.com/ETW, and when you get out there, it'll say Eclipse Illustration Software Installer. Just hit Run Installer, download it, and then go page by page with us. I think you'll find it a better learning experience if you do that. Also by Lincoln Benefit and their parent company, Allstate. They have a fantastic marketing campaign and basic review documents and propaganda. It's really good pieces here, and we really appreciate it. And if you go out to their site and it's playing at the bottom of the screen, or it's attached to our docs that are attached to this video, you can go ahead and cut and paste it right off the Word doc, and you can print it right back in there. You'll want to go to a lot of these, but one of the ones I like is Facts of Your Life booklet. It's a great harvesting tool for client assets, and it has questions there that I would have never thought about asking. Just fantastic. And it comes in actual book form or an attachable email. So if you want to use this as a prospecting tool or for your existing clients, this is excellent. They'll want to have that copy, and especially if you do the electronic version, you'll have a copy for your own file. Also on this site, they have prospecting letters and prospecting postcards. These are excellent tools, especially for beginning. If you said, Steve, I've just never been into this. I don't know the marketing campaigns. I don't know the language. I don't know how to express myself in front of a client. This is excellent tools. And remember, even though it's been approved by Allstate, if you're FINRA licensed, you're going to need to have your broker-dealer compliance department go ahead and look at this before your final approval, before you can use it. And if you're in an insurance agency that has similar protocols, you're going to have to make sure that compliance is okay with it. And then lastly, our site, www.brokersalliance.com. On our site, when you come to our homepage, you see the on-demand videos. That red button carries all our archives, not only for Edutrainment workshops, and you need to go back to the beginning of this course because you really need to make sure you have the foundations and the cornerstones laid before you start. If you're walking into this course today for the first time, you really need to go back to the beginning. You can go out to our site, www.brokersalliance.com, and as soon as you come there, hit the on-demand videos, and out there, Edutrainment workshops, as well as our daily talk show that plays right on our homepage, the Business Insurance Show. All right, well, let's just look at some of the things that we're going to be talking about here for a second. And I'm going to go to the whiteboard, and I'm going to just talk about a few of the ideas that we use second to die for, or survivorship. One of the first ones that come to mind is estate taxes. Now, right now, the unified credit is fairly high. $5 million apiece or $10 million for married couple. So if your clients are under that, you may not be doing full-blown estate planning, but if you come with people that have serious needs and serious issues, estate planning, you want to use the leverage of tax. Why should I pay? I have to pay the government about 9 months after the second death. I have to settle up with them. Why not pay it with discounted dollars or the leverage of second to die? The second thing is even though your clients may not be high in the unified credit of $5 million apiece, you still have state taxes. Very interesting. So many people have forgotten about this. No matter what Congress does for 2013, this is going to be in play. And remember, many of the states have low exemptions, and that means that they're exposed to state transfer taxes, maybe not federal, but for sure they're state. Another thing when we look at this kind of planning, charitable giving comes online. Now, what I really like about this, and especially second to die, is this is the arena where people say, you know what, I really have a big heart for my charity, an IRS, it has to be approved, a nonprofit IRS approved entity. I really have a heart for my charity, but I just don't have the money. What happens when you have big heart but a small wallet? Well, in charitable giving, we have clients that give $3,000, that's all they can afford, but they're going to be giving away maybe $100,000 or $200,000 or $300,000 when they both pass. This is one of the greatest tools for charitable giving for people who are benevolent, and there's no more people benevolent than the United States. Americans are just very, very endeared to their charities, and even people who don't have major money can cash flow a grand or so, or even in my example, way less than that, $300 or $400 a month. They can be able to fund charities when they die and be able to make sure that their nonprofit is going into perpetuity. It's really a great idea, easy idea to understand, and we have a complete series that Ken Davis did with me on charitable giving, and it's out there. We have our 5 video section series, all our support documents for charitable giving. And if you say, Steve, I'd like that, just say, Steve, I want that whole charitable giving. Send me the landing page address for that. Just write me, thebiz@brokersalliance.com, and I'll send it to you. And another thing we do is we want to do legacy planning. Legacy planning, I might want to be able to say, I really need to use the funds for my wife and I. We need to have that money and keep that money all the way into our 80s, our 90s, or whatever, maybe even age 100. But I can do legacy planning for my children or my grandchildren as I become a grandfather now. It's kind of cool. When you're doing legacy planning, I can do things for my kids at my death that can really help them, whether they use the money for a down payment on a home, whether it's education for their kids, whether it's retirement, helping them with their retirement. There's so many leveraged issues I can do to perpetuate the legacy that I started and really give them a really big boost in this economy, especially when you think about what we're facing as a country. This could be a very well a way to make sure that your progeny is protected by doing legacy planning. Again, remember, 2 parts here. Your kids, the generation, and then, of course, your grandkids. You can skip a generation and start to be able to help your grandkids out. Legacy planning is a great idea. It's really something basic. Even if you don't have a state taxes due, big state taxes or state taxes, you can do charitable giving and legacy planning. Now, one more, and I call this kind of somewhat bizarre planning, is income using second to die. I know people say, Steve, it's an indemnification platform, but income could be the way to play. Think about this as an income scenario. I have a 5-year-old, and I have his mother, and I have her grandparents. Depending upon the contract, you could put either grandfather and the son, grandson, or mother and the son, depending upon what you want to do. You could go ahead and fund that using your annual gift and putting your annual gift inside this second to die. And that funding over their life period, because they're the payors, they're the payers, that could fund this child's college, MBA program, PhD. It could even be enough, depending upon how they fund, it could be enough to also do a down payment on a home, set them up for their own retirement, and possibly even send their kids to school on the same contribution based on what I call Einstein's theory of compounded interest. If you have people being born, 5-year-old, and they stay preferred non-smoker or super preferred, the odds are all these next generation kids are going to see 90s and 100s all day long. You could have this kind of unbelievable 80 to 90 years of compounded tax-free, as long as the code doesn't change. These would be huge ideas to put together, and now we're looking at it as tax-free income in between split generations or different generations, depending upon which works. Remember, there's carriers that some carriers have thresholds. You can't go so all the way down below 30 or 20. They have certain age limitations, but some will let you go pretty far down there. So again, second to die, you may want to look at this. And because you're looking at it as an income, now I may be looking at it differently. Maybe it's variable second to die. Maybe it's indexing second to die. Maybe it's par whole life second to die. Maybe it's current assumption UL. I have 4 different platforms now that I'm looking for second to die, using it as an income scenario, and I might be able to put on split generations on that contract and try to develop a theme around that, which is how can I provide tax-free income for almost all of life's big ticket items. This is a huge idea. I look to see this become a major play as more and more carriers look at second to die as a supplemental income play as well as an indemnification play. Now, with that said, let's go and look at a basic idea that we're going to introduce you to, and of course tomorrow as well. We're on Lincoln Benefit Software, second to die. And remember, now instead of having one input, I have 2 inputs now. One for the male and one for the female. And remember, some people actually use this for business. So I could have business owners, and they may tactically use second to die, 2 males. So it doesn't have to be male, female. It could be 2 males, could be 2 females. There are a lot of tactical uses of this in business, whether it's buy, sell, cross purchase, stock redemption, wait and see trust, tactical issues, maybe even income, as I pointed out. So what I want to look at is, I want to look at all the ideas. In fact, it actually has a tag for business partners. I want to be able to look at my male and female in some of our examples like we used yesterday on our grids. And I want to be able to use 65 and 65, and both of these are using preferred non-smoker. Then I want to go down to death benefit. I'm using the same amount of death benefit as I did in yesterday's grid work and showing our spreadsheets. And I'm using option 1, which in their language and Lincoln Benefits language is level death benefit, and I have $1 million. That's my specific need, my target death benefit, $1 million increasing. And then I want to look at what is the ledger. The ledger is going to tell me a few ideas here that are going to make it important. And what I do is I look at this and say, here's $12,978 for preferred non-smoker. It's $1 million worth of coverage. It shows me the guaranteed payment and the guaranteed death benefit. This is a survivorship GUL, guaranteed universal life. Interesting to note that when you look at this, it's all guaranteed, and the premiums, it shows the annual premium of $12,978, but if you had to pay the minimum safety net premium for the first couple of years just to get the contract online, it could be as low as $6,681. That's a huge discount to get underneath that number. And think of it this way. When you're looking at the kind of power of leverage, paying $12,900, let's just call it $13,000, and if I went to life expectancy on the female, maybe to age 90, because they're preferred, I'm looking at 30 years at $13,000. So we're really looking, when you look at it, it's $390,000 to get $1 million tax-free. So it really matters to look at this. In my view, you're looking at different ideas that actually will help you understand why we're using second to die, because the leverage is just that great. When I'm looking at which contract I should use, I'm looking at a contract like this. I like the way this is laid out. This is so easy to do, and I find that using it is, what are you buying? Remember, when I'm looking at a sales track, to have my illustration have a sales track embedded inside the contract, notice that the caveats aren't there in the first couple pages. It's easy to explain to a client, and when I'm looking, what are you buying? The policy covers 2 people, and the death benefit is paid after the death of the last surviving insured. If you're feeling, well, I feel clumsy about my conversation with my client, I'm just reading this verbatim for my client to make it easy to understand, and then talk about the guaranteed cash refund. In this contract, some of these second to dies, including this one by Lincoln Benefit, have guaranteed cash refunds. If you have buyer's remorse, you change your mind, the law changes. They have a lot of flexibility in this contract. One of the most big reasons that companies like this or carriers like this are so popular is because of this very feature. I have liquidity. But what I like about this is it just lays it out in such a nice format. It tells me the benefit for cash value, the competitive rates, and what's my lifestyle all the way out. Tomorrow, when we come back into this illustration system, we're going to walk through a bit of the mechanics and the policy expenses that go along with survivorship contracts.
This has been an Edutrainment Workshop, the educational division of the National Insurance Clearinghouse, the marketing arm of Brokers Alliance, and sponsored by Lincoln Benefit Life, an Allstate company.